Everyone, welcome. Today's educational episode is how to analyze a rental property. We're going to give you some tools to make it quick and easy. If this is the first time you're watching one of our videos, we share our knowledge and experience in real estate investing and wealth creation. I'm Dave Hathaway, owner-operator of Hathaway Property Management. Been investing for 15 years, and we currently self-manage a portfolio of 50 units. All right, how to analyze rental properties. So there's a couple things right before we just get into the black and white of the numbers. The first thing is you want to know your market. What does that mean, you want to know your market? You just don't want to invest in something because the numbers are good. Numbers aren't the whole story, so you want to understand what's going on there. Are the prices trending up? Are the prices trending down? How long are things sitting on the market? Is there people coming to that zip code, or are there people leaving that zip code? So once you understand that, then you can just start getting to the numbers a lot more and determine if that's a property you want to purchase. The main goal of analyzing a property is to determine how much money it's going to make you and if you want to purchase that property. So first, you want to select a property that you're like, oh, I think this property is a great deal, whether it's through email. We're going to select one off of Zillow.com here that I have up in front of me. I'm very familiar with Baltimore, so this is a market that I actively invest in on a daily basis, and I'm looking at things daily. And if I was looking at this screen, as with my experience, I would say, oh man, this is an interesting one. It's a 5.2. It's in an area that I like, and so I would just click on this. But this could be an email that you got from a wholesaler, or it could be a filter that you set up, and you're looking through your filter and you go, ooh, that property looks pretty good. So you find a property that looks pretty good. This is 1637 North Carolina. You take a look at the pictures. Looks like there's only 4 pictures here, so it doesn't really give you much of a insight on how much the rehab would cost. But we do have a price point, and for this example, it does not really matter. So you come on in here, and you're going to want to type in 1637 North Carolina Street, and this is a analyzer that I've created and kind of fine-tuned, and it makes it really easy to understand the numbers. You can download it for free on our Koji site. Just look in the description of the video. So you want to first type in, and all these yellow boxes or tan boxes or whatever color you want to call them, those are the ones that you want to change. The gray ones auto fill in for you to make your life easy. They have formulas in there. So we'll say the purchase price $150. That's how much it's listed for. And it's cool because you can come back in here and see if you need to offer less. You can offer more. You don't know how much the rehab is, but let's just say, for instance, we're going to put in $15,000 just to see if it's going to work out and if it's something we even want to investigate more. Closing costs are going to come in. So you go over to your Zillow dashboard on the property, and you come down, and you're going to be able to find out property taxes. Looks like $1770. So you can type in property taxes, and they even have it's right here. I'll highlight it for you. Come down a little bit more and actually all right, so you have property taxes. I'm going to highlight it there for you, the 1770. If you go down a little bit further, they give you a estimated insurance, and I mean, you can utilize that. It's probably going to be a little bit more because this is kind of a big house. And then, does it have an HOA? This one does not, so you can just put in 0. Are there any dues? No. Is there any ground rent on this one? No. Are we going to pay utilities? We are not. The tenant pays utilities. So that's if you have a multifamily or 3 units and you have to pay some sort of water. Down here, the VR percentage, this is just vacancy rate. You can change this vacancy rate. We found for this market, and it's going to be market dependent. So we found for this market, vacancy rate about 10% is conservative. Sometimes if a tenant stays for 7 years, that vacancy rate's high. And sometimes if a tenant moves out, every year, that vacancy rate's low. You come on down. Once you got all that in, you can see that your cash flow, so your expenses are right here. That's how much it's going to cost you each month to own that property without a mortgage. And that's if you're paying all cash. So $169,125 Oh, we didn't actually do the rent. So last thing you need to input is rent. So you want to come and it gives you a rent zestimate. So it has 1714. You want to come back over here, type in your 1714. Because I know this market, I know we can get more. 1714 is pretty low. I'd probably get somewhere in the 18, maybe even 1900s. It's even possible to get in the 2000s. I'll actually put 1795. It stays conservative, and we come down and it gives you all your monthly expenses right here. It gives you the cash flow. So after your expenses and you're collecting rent of $17.95, how much you're actually going to be making. So you're going to be making $1271.40 each month, and it comes out. It gives you return on investment or return on income percentage. It's going to give you 9.02%. So you're making 9% on your 169, purchase and rehab. And then if you go over here, if you want to put a loan on the property, you're getting a loan on the property, this side of the chart is good. And it also gives you even more insight. Right now, interest rates are high. So right now, there's interest rate I have at 7.3%. Just a year ago, they were at 4.5%. I even have a loan for 3%. But if you were to go to 4%, you can see how much it changes cash flow down here and the ROI. But if you go to 7.3%, see how that is such a big change from 20% return on investment to down to 11.57%. So you also have to determine what your buying criteria is, but this is going to let you know, hey, I'm going to be making $407 each month if I have a loan on the property, and you'll also be paying down principal, but this takes that into account. That's what your net income is going to be for that property is 407. So hopefully that helps when analyzing a property. There's also some other stuff that gets a little bit more advanced. It talks about appreciation. This is a purely cash flow. And then if you want to see how much you'll make as the property appreciates, if it appreciates 1% a year, 2% a year, 4% a year, you can see how much your ROI goes up. And same thing with the loan. And these are kind of fun to play around with. And then down here, you can also put in what the actual value. Let's say you're getting the property at a discount. Let's say you got this property at 150, but fixed up, the property's worth 195. No, wouldn't be worth 195,000. It just tells you what your spread is, how that affects your ROI here, and just gives you a little bit more insight. So hopefully that helps. Should make it much easier, much quicker for you to determine if it's a good deal or bad deal. Guys, if you found this content valuable, I'd love if you like and subscribe to the channel below. It really helps us, and we'll see you on another educational episode.